Hello friends, today we're going to find out, is BlackRock buying single-family homes? So you've probably heard the rumors of one of the largest institutional investors out there, BlackRock, purchasing and gobbling up single-family homes. Well, by the end of this video, you'll understand whether BlackRock is actively purchasing and pursuing single-family homes and what impact that can have on the housing market. My goal is to separate fact from fiction and really give you a detailed answer on if this is happening and what impact this can eventually have. So there's definitely widespread concerns about these organizations, these large institutional investors buying single-family homes, and that potentially driving up prices to make it more difficult for the average person to purchase a home. And what role does BlackRock play in that? And are these companies contributing to the housing crisis that we're facing right now? Is there any truth to these rumors? Well, I'm going to dive into this topic by first giving you a background and understanding about BlackRock and other large institutional investors. Second, I want to cover information about recent news regarding BlackRock purchasing single-family homes. And finally, I want to give you some direction on how you can benefit from this news. If you're ready, let's go. When it comes to large institutional investors, BlackRock is the biggest. But there's also companies like Vanguard or State Street that are also significant players. Those are the top 3 institutional investors out there. And the goal of these organizations is to take investors' money, to take that money and invest in worthwhile companies or projects that are going to make the investors a solid return on their investment. And a lot of times this is big money. We're talking about like the New York Police Department pension fund, right? Or like the School Association pension fund. They put it into these organizations. These organizations take all that money. We're talking billions of dollars. In BlackRock's case, trillions of dollars. And they're investing it into publicly traded companies or private equity companies that have a stake in private companies. So they're deploying that capital in hopes to make a really good return. That's the goal of these large institutional investors. And these companies are really good at what they do. And if you think of probably the biggest publicly traded company out there, chances are BlackRock, Vanguard, or State Street has some sort of stake in these companies. It almost seems like they have their hands in everything. And some of BlackRock's largest holdings are in companies like Facebook, Nvidia, Microsoft, and Apple. These people know the investing game. So there has been the news out there that although they invest in some of these publicly traded companies, that BlackRock is actively purchasing up single-family homes. And I want to look at this at 2 different ways so I can provide the clearest picture for you as the real estate investor. So I went and I looked directly on BlackRock's website, and this is what they said that came directly off their site. They said a number of other large asset managers and private equity firms are very active today in purchasing single-family residences. BlackRock is sometimes confused with them. As fiduciary asset manager, we invest and manage capital on behalf of our clients in a vast array of public and private U.S. real estate markets, but buying individual homes is not one of them. But as I did a little bit of digging, I also saw that they do invest in construction companies and mortgage companies. And in regards to that, here's the quote concerning their investments into real estate related organizations. Most recently, we began investing in new construction, purpose-built for rent housing developments that add supply to the market and address the increasing demand we see for this property type. Our focus is on building single-family rental housing that can be managed and operated similar to multifamily properties with dedicated property management, leasings, and amenities. So that is a direct quote from BlackRock, but one thing I found about these companies is they are really good at wordsmithing something that has been done and getting it to the public in such a way that it doesn't sound so bad. However, I continue to do a little bit of digging, and this is what I found. Now, BlackRock itself isn't, but BlackRock is invested in private equity companies that are actively purchasing single-family homes. So directly, BlackRock is not buying single-family homes, but this company they have a large stake in is doing that. And at this point, I think it's important to understand a private equity company versus a public equity company. Public equity companies are purchasing stakes in publicly traded companies, the ones that you see on the stock exchanges, on the New York Stock Exchange or the NASDAQ, whereas private equity companies, these are companies that are buying and staking an interest in private organizations that aren't publicly traded. BlackRock or these public equity companies can definitely purchase private equity companies that do have stake in private organizations or are purchasing single-family homes. Here's some data I got off of CNBC that was a little bit alarming regarding these organizations buying single-family homes. It said by 2030, some institutions may hold up to 7.6 million homes, or more than 40% of all single-family rentals on the market, according to the 2022 forecast by MetLife Investment Management. So to sum it up, BlackRock isn't directly purchasing single-family homes, but they do invest into a lot of organizations that are actively in that space purchasing single-family homes as rentals, that are purchasing management companies, that are purchasing mortgage companies, and purchasing construction companies that are building single-family homes to eventually rent out. And we see that quite a few of these private equity companies are now purchasing single-family homes. Now, could all that change? Absolutely. But it does raise an eyebrow to think, if these private equity companies are purchasing a lot of single-family homes, can they control the rental market? Can they price the average American out of buying a home or even renting a home? Which is kind of scary to think about. So what does this mean for you as an investor? Well, number one, it might not be a bad idea to start buying some of these single-family homes. If you can grow a small portfolio of single-family homes and hold on to those, get renters in there, or do some creative strategies like lease options or slow flips, if you're able to do that and you have this portfolio and these organizations do go out there and start buying single family homes and the rental market starts to go up, what kind of position are you going to be in? Well, you're going to be in a pretty good position if you buy them now or over the next 5 years and watch the rental demand start to go up. If people aren't able to purchase a home because prices are high, interest rates are high, what are they going to do? Are they just going to live on the streets? Absolutely not. They're going to want to rent homes, especially single family homes. So you'd be in a really good position. So that is something to be really thinking about as you get this news about these institutions that are purchasing single family homes. And some of you might say, well, I don't have money to participate in this and go out and buy single family homes. Am I just out of luck? The short answer is no. You just need to be creative and be looking in the right places. So here are a few things to be aware of as you start navigating the single family market and navigate a world that's kind of convoluted by all these private and public entity companies that are purchasing up single family homes. Number one, I would look in areas where home prices aren't that expensive. Now, you can go into some areas of Texas and find a single family home that on average is $200,000, $250,000, $300,000. You can go to California and find an average single family home is $600,000, $700,000. That's not where I'm looking. Currently right now, I'm looking in the Midwest and other places and looking at homes that are between $30,000 to $80,000. And I'm doing a strategy called slow flips or cash flow flipping. So if you have a minute, go look at some of my other videos to talk about slow flips. I don't have time to get into all of that today, but it's a strategy that is currently working. But the overall goal behind it is finding homes in that $30,000 to $80,000 range at a good price that I can turn around and get somebody in that home paying me to be in that home that is way more than what I'm spending every single month as a payment for that home. Another great strategy right now is sub-2, right? Subject to real estate investing. This is where you go in and you buy a home subject to the current financing that is in place. Right now is a great time to do it because interest rates are so high. There's a lot of people that need to sell their home and their interest rates are at 2, 3, 4%, much lower than they are right now. And you go in on a purchase subject to, you're going to be able to take over their existing loan and maybe give them some money or find a private money lender that's going to bridge that gap from what the home is worth and what is owed, so you can be able to take advantage of the low interest rates subject to real estate investing. And just a little bit more about how the sub-2 works. Let's say that somebody owes $200,000 on their home and their home is worth $300,000. So if you go and you subject to the current financing and take over the loan of $200,000 at a 3% interest rate, the person's still owed maybe $100,000, but let's say you negotiate it down to $70,000. So you get them $70,000. If you don't have it, there might be private money that's willing to do that at a little bit higher interest rate. And by doing so, the payment that you have to your private money lender plus to the bank, if you're able to get a renter in there, most likely might be enough to cover the entire nut of the private money payment as well as the bank payment with that low of an interest rate. So there's a couple different strategies you can actually utilize right now if you don't have money, but I would certainly look into some of these like the slow flip that I'm currently doing in the Midwest, looking for homes that are priced below that $100,000 mark and getting renters in those homes. It's a strategy that is working out really well that I'm excited to report on every single month as I grow this side of my business. Now, these are some things I'm doing to take advantage of the news about these organizations purchasing single family homes, but I'd be interested in what you've heard. What rumors have you heard? Please comment below. Let's engage in a discussion. And as always, just for stopping by and watching this video, I've got a free gift for you. It's aaronsfreetraining.com. It is a short-term rental calculator. Put in the purchase price, the income, the expenses, and it will actually spit out to you whether it's a good deal or not if you're looking at short-term rentals. And it's 100% free and no strings attached, aaronsfreetraining.com. Once again, thanks for stopping by. Have an amazing day.